Imagine a company not just, you know, surviving these weird economic times, but actually thriving, really pushing forward.
Yeah, and grabbing market share. That's what we're diving into today. Amer Sports, their latest Q2 results for 2025, and what they're planning next.
Welcome to the deep dive. We're here to basically pull out the key stuff from their latest reports, earnings slides, the official script, press release, the works.
Right, giving you the shortcut to understanding what's really going on with their performance and their outlook.
Okay, let's get into it. We've got all materials here, and it's not just numbers, is it? It's the story behind them, the strategy.
Exactly. And it's quite a story this quarter. They're calling it a strong second quarter 2025, and honestly, the numbers back it up. Revenue, margins, EPS, that's earnings per share, all beat their own forecasts.
Which is pretty impressive, especially now. So revenue jumped, what, 23% to over $1.2 billion?
Yep, $12,236 million. And even if you adjust for currency swings, constant currency, they call it, it's still a really solid 22% growth.
Wow. And it wasn't just sales, right? Profitability looked good too.
Really good. Their adjusted gross margin went up 250 basis points. That's 2.5 percentage points. Huge jump to 58.7%.
Okay.
And the adjusted operating margin also climbed 260 basis points to 5.5%. Now, you do have to note, about 150 points of that gain was from some government grants, but still strong underlying improvement.
Gotcha. So grants helped, but the core business is clearly performing well. And the bottom line, EPS.
Adjusted diluted EPS ticked up too, from 5 cents last year to 6 cents this quarter.
Okay, so solid numbers. But what's really interesting, you were saying, is the confidence coming from the top.
Yeah, that's what really stood out to me. James Zhang, the CEO, he talked about their unique portfolio of premium technical brands and how they can create white space and take share. It sounds like they really believe they're carving out new territory.
So how are they doing that? What's driving this growth across the board?
It seems to come down to the strength of those individual brands, each playing its part. You got Arc'teryx, just consistently strong everywhere. Then Salomon, especially their footwear, that's just exploding. It pushed their outdoor performance segment up 35%.
35%, that's massive.
It is. And even ball and racket, think Wilson, saw good growth and better margins, helped by that Wilson Tennis 360 initiative.
And they seem pretty bullish about handling things like tariffs, too, which is a big worry for a lot of global companies.
They do. They literally said they're confident in our ability to manage through higher tariffs and other near-term macro uncertainties.
That's a bold statement. How are they backing that up? Is it just talk, or is there substance there?
Well, the CFO, Andrew Page, gave some reasons. He pointed to their diverse global footprint, a clean balance sheet, and importantly, strong brands that give them pricing power.
Ah, okay. So they can potentially shift production or pass on costs because people will pay for the brands.
That seems to be the idea. They actually expect a negligible tariff impact overall this year. It's just they've really planned for this, you know. It's not just hoping for the best.
Okay, that makes sense. A proactive approach. Let's dig into those brands then. Starting with Arc'teryx, leading that technical apparel segment. Revenue up 23% there.
Yep, to $509 million.
Yeah.
And the growth is coming from everywhere. Direct-to-consumer selling straight to us was up a huge 31%.
Wow.
And even looking at existing stores and online, what they call omni-comp, that was up 15%, which is impressive considering they were comparing against a strong period last year. Wholesale grew too, just more modestly at 4%.
So Arc'teryx is firing on all cylinders, geographically too.
Yeah, strong growth reported across Asia-Pacific, Greater China, the Americas, EMEA, basically everywhere. And product-wise, footwear and women's apparel were apparently leading the charge.
It feels like they're being very deliberate about how they grow, not just chasing sales, but building the brand carefully.
Exactly, which, raises that classic question. How do you grow fast but keep that premium exclusive feel?
Right.
And their retail strategy seems key. They opened 7 net new stores in Q2, aiming for about 25 net for the whole year. But it's not just about adding doors. No, they're focusing on a high-quality retail network. Like in Greater China, they're actually planning to close some smaller stores but open larger, more impactful ones, optimizing, not just expanding blindly.
That sounds smart. Quality over quantity. And they're going into some pretty high-profile locations.
Oh, yeah. A new flagship in Vancouver on Robson Street, Milan, Stockholm, Banff, and a big one coming in Q4 on Fifth Avenue in New York at Rockefeller Center. That's prime real estate.
Definitely sends a message.
Yeah.
And that Beijing store in the Peninsula Hotel sounds very high-end.
An elevated expression of the brand, they called it. leaning into that luxury tech space.
Yeah.
And product-wise, footwear like the Norvan LD4 and Vertex Speed is their fastest-growing category, plus a real focus on women's gear, like the Clarkia pant, showing double-digit growth.
And they keep mentioning community stuff like that Alpine Academy in Chamonix. Is that just marketing fluff?
I don't think so. For a brand like Arc'teryx, that community engagement feels critical.
Yeah.
It builds loyalty, authentic awareness. It shows they live the values they sell, you know?
Makes sense. Okay, let's shift gears to outdoor performance, driven by Salomon. Revenue up a staggering 35%.
Yeah, $414 million. And it's overwhelmingly Salomon soft goods footwear, apparel, bags, socks. You really do see Salomon shoes everywhere now, don't you?
You really do. It feels like they've crossed over from just pure performance to, like, mainstream cool. What's driving that?
It's the Salomon footwear acceleration they talk about. It's
Yeah.
global. It's hitting their sports style lines. Think of the XT Whisper, super popular, but also their performance stuff.
Like what?
Well, the Airglide 3 running shoe has this new Optifoam Evo. They're calling it disruptive, new generation foam. Sounds like it offers better cushioning, better energy return. People seem to love it.
Interesting. New tech driving sales.
Yeah, and they're also tapping into trends like gravel running with a specific GRVL line and updating core hikers like the X Ultra 5. Plus, they're expanding stores fast,
Right, you mentioned that. 12 net new ones in Q2.
mostly Japan and Korea, plus a huge new flagship in Shanghai. And big plans for the U.S., like 3 or 4 stores in New York City, plus Chicago, West Hollywood. They want that visibility.
And the Olympics partnership in Europe should help too, right? Milano Cortina.
Absolutely. Big platform to boost awareness there. And it all ties into a strategic shift away from winter sports equipment.
How so?
Well, back in 2022, skis and bindings and stuff were almost 46% of this segment's sales. By 2025, they project it'll be down to just 28%.
Wow, that's a deliberate pivot.
Definitely. Focusing hard on the year-round, higher growth potential of footwear and apparel. Smart move, it seems.
Okay, third segment. Ball and racket, led by Wilson. Still growing, but maybe not as explosively. Up 11%.
Right, $314 million revenue.
Yeah.
Growth driven by soft goods, which are becoming more important. Now about 15% of the segment's sales and their racket sports business.
That tennis 360 thing seems to be working then?
Seems like it. They highlighted an 18-year-old Wilson athlete, Victoria Mboko, winning a big WTA tournament wearing Wilson head to toe. Great visibility.
Nice.
Plus, leveraging icons like Roger Federer with his collection and tapping into pickleball with paddles like the Vesper. They're hitting the right notes.
And soft goods actually doubled.
Wilson soft goods, yeah, doubled in Q2. Shoes, like the women's Intrigue tennis shoe, are doing well. And they plan like 50 more of those Wilson Tennis 360 shops in China this year.
So good momentum there. Any weak spots?
They did mention softer sales in gloves, inflatables, and golf, which is a bit surprising given golf seems strong in the first half, but maybe just some lumpiness there.
Okay. And there was a management change at Wilson, too.
Yeah, kind of a big deal. Joe Duty, the CEO, is stepping down after 30 years. That's a long tenure.
Wow, 30 years.
Yeah. But the company's CFO, Andrew Page, is stepping in as interim CEO, which honestly might signal they want a steady hand focusing on the financials and building on that soft goods momentum. It doesn't feel like a crisis change, more like a strategic transition.
Right. Makes sense given the momentum in key areas. Okay, so strong Q2, compelling brand stories. But what about looking forward? The guidance.
Right, this is where the rubber meets the road. And yeah, their confidence really shows here. They've raised their full-year expectations pretty much across the board.
Even with those tariff assumptions baked in.
Even with the tariff assumptions.
Yeah.
So for the full year 2025, they now expect reported revenue growth of 21%. That's up significantly from their previous forecast of 17%.
That's a big jump. And their balance sheet can support this.
Looks like it. Net debt is manageable at $640 million, just 0.6 times their adjusted EBITDA. That's a very healthy ratio, means their debt is low relative to earnings.
Okay. What about inventory? I saw that was up quite a bit, like 29% year over year, higher than sales growth. Is that a concern?
They addressed that. Said it was driven by a few things. Bringing in fall 2025 goods early, partly to manage potential tariffs, more stuff in transit because they're using less expensive sea freight instead of air freight, and also just currency translation effects.
So more strategic than a sign of slowing sales.
That's the message. They said they're comfortable with the quality and expect it to normalize next year. Plus, they generated $108 million in cash from operations in the first half. So the underlying business is throwing off cash.
Good sign. Okay, back to the full year guidance increases. Margins, EPS.
Also revised upwards. Gross margin now expected around 57.5%, operating margin between 11.8% and 12.2%. And importantly, adjusted diluted EPS guidance is lifted to 77 cents, 18 cents, up from 67 cents, 57 and 72 cents previously.
Solid increases all around. Any specific call-outs for the segments in that guidance?
Yeah, technical apparel expected to grow 22-25%. Outdoor performance also 22-25%. That's a big boost, reflecting that Salomon footwear strength.
Yeah.
Ball and racket projected at 7-9%.
Slightly lower for ball and racket.
Yeah, they did note a bit of a drag there from some tariff impact, steel, aluminum stuff, Vietnam rates, and maybe some shipment timing, but still positive growth expected.
And what about the immediate next quarter, Q3?
For Q3, they're looking at revenue growth around 20%, gross margin about 56.5%, operating margin 12-13%, and adjusted EPS of 21 22 cents.
Okay. So still strong, but maybe implies a slight slowdown in the second half compared to the first half space?
Mathematically, yes. The guidance implies that. But interestingly, they added a comment saying they believe they're well-positioned to deliver financial performance ahead of these expectations if the strong trends continue.
Ah, so setting achievable targets, but hinting they could potentially beat them again.
Exactly. Managing expectations while still signaling underlying strength.
Okay, so wrapping this up for you, the listener, Amer Sports is really demonstrating some serious strength right now. It's driven by this powerful mix of brands, Arc'teryx, Salomon, Wilson, each with its own clear strategy, and they're expanding globally while pretty confidently managing challenges like tariffs.
Yeah, it's a fascinating picture of balancing aggressive growth with smart, strategic moves. So here's something to think about. You have these distinct approaches, Arc'teryx going for premium, optimized growth, Salomon driving that massive footwear acceleration, Wilson building on its legacy but pushing hard into soft goods. How do you think these different brand playbooks will shape Amer Sports' future in this constantly changing sports and outdoor market? Which strategy resonates most with you?
That's a great question to chew on. And if you want to dig even deeper, particularly into Arc'teryx, they're holding an investor day focused just on that brand on September 18th up in Vancouver. Could be very insightful.